What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol DIS for Walt Disney Company. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, I need to let you know they gave us an earnings announcement after the bell today, so let's flip on the extended hour session here and see what's going on with the number, and would you look at that? Nice big move to the upside so far. Again, remember, a lot can happen between now and 9:30, but it's very likely that we'll open on some sort of gap up. So whenever we're dealing with a gap up, we want to know about three numbers: today's overnight high, where the anticipated opening print will be, and of course the high of today's session. So we'll pop that in way down there at 147.32. Let's turn that off, eliminate distractions. Obviously, price will continue to wiggle around, but here are the scenarios on the daily time frame. So whenever we're dealing with a gap, could be up or down. Scenario number one is the gap and trap, and what that looks like is opening here, failing to take out the overnight high, or attracting new buyers rather up and over the overnight high, looking for rejections back down through the open to initiate a short position to close the gap underneath down to today's high of day at 147.32. If we come on over to the trade tab, what you'll notice is that this is an easy to borrow stock. You can see that right up there. And if we just minimize some of these strikes to like 14, there's plenty of volume here on the call and put side of, actually not so much on the put side of things. I take that back. I'd rather just short the shares, to be quite honest with you. If you are looking for downside, especially look at these spreads, 940 by 1110. You're going to get eaten alive if you try to market in and out of these contracts over here. So please try to avoid the Disney put options. It looks like maybe the liquidity picks up tomorrow with the earnings catalyst, but because it's easy to borrow, just short the shares. It's as simple as that. You don't have to deal with those sort of option spreads and the options pricing. So that's what I've got for you to the downside. To the upside, the flip side of the coin, scenario number two, is the gap and go. And I'm sure that's the one a lot more people want to hear about. That's if we open here, put in a bull flag off the open, could look like just an ascending triangle with higher lows. Basically anything that sets up a breakout up and over the overnight high, currently 162, takes us to the next daily area of resistance. What do we have? Notice that there's a large gap overhead. So if we can poke up above 163.90, 164, the prior earnings gap from in here fills way up to 173. So, a huge $10 range in there available if we truly get a gap and go. Again, we are slated to be opening below. I don't necessarily think that Disney puts in a daily bar that looks like that. It wouldn't seem likely to me. So, one step at a time. If the opening print is somewhere up here, yeah, maybe it certainly puts into play something that would look like this. Maybe not all the way. Who knows? But that's basically what we're getting into. If we see an upside swing in Disney, it's all about this prior gap and whether or not we can break into that and start filling it to the upside. That's really where our targets are going to come from. So if you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.